Everyone imagines the super rich have a hidden formula for wealth, a secret vault, a password, a trick only they know. But here's the truth. There is no secret vault, no magic formula. The real strategy is simple and out in the open: patience and discipline. Most people overlook it, searching for shortcuts or get-rich-quick schemes. The myth of exclusivity keeps people from even trying, but the path to wealth isn't locked away. It's accessible to anyone willing to follow it. Let's break down what actually works. For many people, investing feels a lot like stepping onto a wild roller coaster, one filled with unpredictable twists and turns. Most people treat investing like gambling, chasing hot stocks, hoping for a quick win, and letting emotions dictate their every move. They get swept up in the excitement, thinking they can outsmart the market, but often end up making impulsive decisions that cost them dearly. They buy high on hype, jumping in when everyone else is talking about the next big thing, and then sell low in panic when the market inevitably dips. The constant barrage of news and social media only adds fuel to the fire, making it even harder to stay calm. FOMO, the fear of missing out, drives them to invest at the worst possible moments, while fear and uncertainty push them to sell at a loss, locking in their mistakes. It's a cycle that repeats over and over, leaving them feeling powerless and frustrated. This cycle of emotional decisions guarantees small wins that are quickly erased by much bigger losses. The brief highs of a lucky trade are always followed by the crushing lows of a bad one. They check their portfolios constantly, riding a wave of anxiety and excitement, never feeling truly secure. Every market swing feels personal, and every dip feels like a disaster. It's exhausting and fruitless, like trying to drive a car while staring at your feet instead of watching the road ahead. You lose sight of your destination and end up making dangerous mistakes. This short-term, chaotic approach is why so many people lose money in the market. It's like playing the lottery with your future, hoping for luck, instead of building real wealth. But investing isn't about luck or perfect timing. It's about discipline, patience, and having a clear strategy that you can stick to, even when things get tough. The real winners are those who create a plan, focus on their long-term goals, and stay the course, no matter how wild the ride gets. That's the key to lasting success in investing. Here's what the wealthy actually do. While many people chase the latest hot stock or panic when the market dips, the truly wealthy take a very different approach. They invest consistently, then do nothing. No chasing trends, no panic selling, and no celebrating tiny wins. Instead, they focus on the long game, letting their money work for them quietly in the background. They use a strategy called dollar-cost averaging, investing the same amount of money at regular intervals, no matter what the market is doing. Whether prices are up or down, they stick to their plan, knowing that over time, this smooths out the highs and lows and removes the stress of trying to time the market. Instead of betting on individual stocks, they buy broad, diversified index funds. These funds spread their investments across hundreds or even thousands of companies, reducing risk and capturing the overall growth of the market. And here's the key. They hold on to these investments for decades, allowing compound interest to work its magic. Time is their greatest ally, and they know that real wealth is built slowly, not overnight. When markets drop and headlines scream disaster, they don't panic. Instead, they see opportunity, knowing that downturns are a normal part of the journey and often the best times to buy more. Their real secret isn't some hidden information or insider tip, it's their behavior. Patience, consistency, and the discipline to ignore the daily noise are what set them apart from the crowd. This approach may seem boring and repetitive, but it's methodical and incredibly effective. The wealthy know that excitement and drama are for movies, not for building lasting wealth. By automating their investments, they remove emotion from the process. This helps them avoid common traps like buying high out of excitement or selling low out of fear. In the end, wealth is built by sticking to a simple, proven plan for a very long time. It's not about luck or secret formulas. It's about patience, discipline, and letting time do the heavy lifting. Imagine for a moment that investing is just like planting a tree in your backyard. It's not about instant results, but about nurturing something small and watching it grow over time. When you first start investing, it's like placing a tiny sapling into the earth, full of potential but still fragile and needing care. Your first investment is that sapling. It might not look like much at first, but it's the beginning of something much bigger. Every dollar you invest is like a drop of water or a handful of soil helping your sapling take root. You plant it in rich, nourishing soil. Think of this as choosing a diversified fund or spreading your investments across different assets. This foundation helps protect your investment from storms and gives it the nutrients it needs to thrive. Just like a tree needs sunlight to grow, your investments need the right environment, economic growth and time in the market to flourish. And don't forget to water it regularly. This means making consistent contributions, even if they're small. Over time, these regular investments add up. Just like steady watering helps a tree grow strong. At first, you might not notice much change. Growth can be painfully slow, almost invisible. It's easy to get discouraged when you don't see immediate results. Many people lose patience and abandon their investments, or they chase after fully grown trees, those hot stocks that seem to promise instant riches. But these shortcuts rarely lead to lasting success. The wise, patient investor keeps nurturing their tree, tending to it through ups and downs, and trusting the process. They know that real growth takes time and care. Decades later, that tiny sapling has transformed into a massive oak, its roots deep and its branches wide. It now provides shade, comfort, and lasting wealth for generations. The real secret isn't about finding a magic seed or the perfect investment. It's about letting time and patience do their work, allowing your money tree to grow strong and steady, year after year. Compounding is the force that turns small investments into huge wealth. At first, growth is barely noticeable, returns seem tiny, but as your earnings start earning their own returns, the snowball grows. The real magic happens in the later years, when compounding accelerates. Cashing out early means missing the most explosive growth. The difference between holding for 20 years versus 30 can be hundreds of percent more wealth. Most people quit before compounding works its magic. Staying the course is the key to unlocking exponential growth. The wealthy think in decades, not days. They ignore daily market noise and focus on long-term growth. A market crash is just a blip on a 40-year chart. The hardest part is training yourself to tune out distractions and automate your investments. Make your plan boring and hands-off. The less you meddle, the better. Anyone can adopt this mindset, no matter how much they start with. Consistency, patience, and time are the real secrets. Start now, stick with it, and let compounding do the heavy lifting.